Hey everyone, welcome back to the Noob Selling Options channel. So, what if I told you that you could pull off a massive return on a simple options trade in just 7 days? Look, this isn't about getting lucky, it's all about having the right strategy. And today, we're going to break down exactly how it's done. Let's dive right in. Yeah, you are seeing that number correctly. 252%. But let's be super clear here. This isn't some guaranteed annual return. This is what happens when you annualize a really nice profit made in just 7 short days. So the real question is, how do you make your capital work so darned efficiently that a rate like this is even possible? Well, that's exactly what we're going to unpack. All right, so what was the trade? We sold a cash-secured put on ServiceNow, which, as you probably know, has the ticker symbol NOW. We're going to look at this thing from every angle, from the moment we entered to our very, very profitable exit. And here it is, the entire life of the trade. On the left, you can see where we sold to open on April 10th, and then on the right, just 1 week later, we bought to close. That's the whole shebang. 1 week. That is literally all it took to execute this whole strategy. So let's crunch the numbers real quick. We secured the position with $7,500. We collected a nice $560 premium for opening it, and then we only paid $195 to close it out. That left us with a super clean net profit of over $363. Not bad, right? Now, that $363 profit might not sound like a life-changing number all by itself, but think about it this way. It's a 4.85% return on our secured capital. And here's the kicker. We did it in just 7 days. That is what I call pure capital efficiency. Okay, so this is probably the most important question of this whole breakdown. The trade was clearly a winner, right? The stock was doing what we wanted, so why on earth not just let it ride until expiration and collect every last penny of that premium? Well, this is where we move from just placing trades to actually managing them strategically. You see, the decision to close wasn't some gut feeling or a random guess. It was driven by a really simple but powerful framework that I call the 3-pillar exit strategy. This is the exact system we use to maximize our efficiency and, just as importantly, cut our risk. So here they are, the 3 pillars. First, we capture what I call profit velocity. Second, we unlock our capital. And third, we completely eliminate risk from the table. Let's break down each one, starting with profit velocity. This chart just says it all, doesn't it? We captured 65% of the maximum possible profit from this trade. But here's the crucial part. We did it in just 10% of the contract's entire lifespan. Think about that. We got a huge chunk of the reward in a tiny, tiny fraction of the time. Now, let's look at the alternative. To squeeze out that last 35% of profit, we would have had to tie up our capital and stay in a risky position for another 2 months. 62 days. The daily rate of return just drops off a cliff. It is simply not an efficient use of our money. And that brings us perfectly to the second pillar, unlocking your capital. You know, while that trade was open, our $7,500 was basically stuck, held hostage. By closing it, that cash is immediately freed up to be redeployed into the next high-probability trade. We get to start the clock on a fresh return right away. That's what capital velocity is all about. And finally, we have pillar number 3, eliminating risk. You know, as long as a trade is open, literally anything can happen. Some crazy news event, a sudden market sell-off, a spike in volatility. Any of these things could instantly wipe out our gains. By closing the position, we take all of our chips off the table. The win is booked. It's ours. The risk drops to 0. Done. This quote really just nails the entire philosophy here. When you're selling options for income, you're not always trying to buy the stock. You're basically acting like an insurance company, collecting that premium. The real goal is to generate a steady, predictable cash flow, and locking in a high-probability win is a core part of making that system work. So, if you remember just one single thing from this breakdown today, please let it be this. In this game, capital velocity is absolute king. It really is all about keeping your money working for you, not the other way around. Having a disciplined approach to taking profits, especially when the market gives them to you quickly, means your capital is never just sitting around idle. It's always on the move, getting put to work in the next best opportunity. And that leads me to a final question, something for you to think about with your own strategy. Is your capital really working as hard as it could be? Or is it maybe tied up in some of those slow-moving trades, just waiting for that last few percent of profit, while other, maybe even better opportunities are passing you by? I really hope you found this deep dive into the ServiceNow trade helpful. And hey, if you want to see more real-world trade breakdowns just like this one, do me a favor and make sure to like this video and, of course, subscribe to the channel. Thanks so much for watching.